Let's turn to this week's Bidenomics, and we've been talking about it so far in this show. And the report out yesterday that President Biden could potentially almost double the capital gains tax rate, that certainly did put investors on edge yesterday. We saw the reaction in the markets, although investors seem to be shrugging it off today with the Dow closing up 227 points. But let's bring in Rick Newman for a little bit more on this. And Rick, I think what investors are trying to wrap their heads around, or really trying to decide at this point, is how likely is this to actually happen and to actually go through?
This was no secret. Biden talked all about the taxes he wanted to raise when he was a candidate last year. Voters basically said, okay, sounds good to us. They elected him. He went to the White House, and now he's basically doing what he said he was going to do. So you're right. That's obviously the relevant question. Biden is not going to get the exact tax hikes he's asking for on any of the measures he wants to do, I don't think. So he wants to tax, and this is just for people who earn more than $1 million or more every year. He wants them to pay capital gains taxes at the income tax rate, which would effectively double it from 20% to the new high tax rate he wants, which is 39.6%. It's currently 37%. But he's probably not going to get that. The securities industry, which this would affect, does have some friends among Democrats, including Chuck Schumer, who's the Senate Majority Leader, and a few others who run important committees. So maybe we're going to see what we're likely to see with the corporate tax rate, which is somewhere in the middle, split the difference. So a lot of the analysts are saying we could get a 28% tax rate. Again, that's just for the 0.3% of people who earn more than $1 million per year. For everybody else, it would remain at 20%. And it's probably going to be the same with the corporate tax. Biden wants a 28% rate. He might get 25% or 26%. And I think you're right. The market basically said, oh, yeah, we remember this idea. Maybe it's not that big a deal after all.
Well, Rick, you pointed out in your article, though, that part of his calculus is, yeah, people may be in favor of taxing those who are very wealthy, but everyone who's earning perhaps less needs to benefit from it. And that's not so easy to do. I mean, just raising taxes doesn't mean people at the lower end benefit, does it?
Yeah, we talk a lot about Biden's tax hikes that he wants to put through. We talk a little bit less about why he wants to do that. So this is where he wants to get the money for all the new spending programs. Part of it is the climate infrastructure. Part of it is social welfare spending. He wants to make permanent an increase in the child tax credit, more affordable housing, more help for child care and elder care and things like that. And he's saying this is how we want to pay for it. So I think the political risk for Biden is not raising taxes on the wealthy. Most voters say that's fine with them, and this really does not risk what you might call the Biden base. But if he does all these programs and people don't notice any improvement in their lives, then they're probably going to remain as cynical as they already are and say, here he goes, yet another Washington politician who tells us he's going to make things better, and he doesn't. So that means that in addition to the tax hikes, Democrats need to get the spending right, and they need to do it in a way that makes people feel their lives are actually getting better.
All right, Rick Newman. And of course, everyone can check out Rick Newman's latest column on yahoofinance.com. Rick, have a good weekend.